let's start then, if we may, by asking you to introduce yourselves. You do all clearly have different backgrounds, but I hold you both all in very high esteem. So please feel free to give a reasonable amount of detail as to who you are. Amma, you're at the top of my screen. Sorry, Amarachi, you're at the top of my screen. If you could kick off, that would be lovely.
Thank you, Julia. So my name is Amarachi Seery, and I'm a sustainability analyst for Janus Henderson. And I've been working in sustainability now for a very long time indeed. I normally count it as 13 years, but I would say that some of my unpaid sustainability work began well before that. I have a degree in environmental management, and I also have a master's in interdisciplinary design for the built environment, and I'm also a chartered environmentalist. Probably that's why Julia might have asked me to come onto this.
It might be, it's just possible, but also you're good at explaining stuff, Amma, so brilliant. Thank you so much for being involved. Ben, sorry, I remember it was Climate Ben they were calling you, wasn't it? So Ben, you're next on my screen. If I can bring you in, please.
Yeah, thanks very much, Julia. Hopefully you can hear me.
Yes, indeed.
Okay, great. Yes, so my name is Ben McEwen, Sarasin and Partners, Climate Ben, also known as, I think it's better than Carbon Ben, which was my previous iteration. My responsibility at Sarasin and Partners is to integrate both the risks and opportunities into our clients' portfolios. I have a slightly varied background. I've worked as a chartered accountant, a commodities economist, and also used to be a natural resources equity analyst. So I'm never sure if I'm the poacher turned gamekeeper or the gamekeeper turned poacher, but very pleased to be here today.
Thank you. Randeep, can I pass to you to introduce yourself then, please?
Sure, and a warm welcome to everyone listening, including the rest of the panel. I'm Randeep Somel. I am manager of the M&G Climate Solutions Fund. I'm 17 years at M&G on the equity desk. I work across our impact and sustainability range of funds. And as I mentioned, I specifically manage the Climate Solutions Fund.
Thank you, brilliant, Randeep. Vicki, if I can come on to you now.
Hi, Julianne. Hi, everyone. Good to see you. Vicki Bakhshi. I work as a climate change strategist at BMO Global Asset Management. I've been working on climate change for something like 20 years now. As you mentioned, I used to work in the UK government. So I was working in number 10 when Tony Blair was Prime Minister back in the day as climate change advisor. I worked with Nick Stern on the Economics of Climate Change review. And then I've been working at BMO, formerly F&C, for 15 years now on climate change. Currently co-chairing the IIGCC's implementation working group for the Net Zero Investment Framework, also chairing the Investment Association's climate change working group, and my responsibilities at BMO include implementing our net zero commitment, as well as overseeing our climate stewardship programme.
Brilliant. Thank you. My voice is now echoing back to me, which I'm hoping you're not all picking up your end. But thank you so much for those introductions. So I'm sure you'll all see this. You know, we have a really good group to go through this particular subject matter, and I'm hugely looking forward to this session. Can we then start by just spelling out climate change? Why does it matter? You know, there'll be people who are watching this, whether they're on today or watching it on video when it goes onto our site, that may be a lot less experienced in this area. Amma, can I perhaps come to you to spell out, you know, at the heart of this, why does this really matter?
So first and foremost, I think it's really important to say that quite often when we talk about climate change, most people frame it in terms of saving the earth. And there is an element of truth to that. But let's be clear, the earth will turn on its axis even if we're not here to see it turn. Climate change is really about saving us as a species, saving us as a civilization, and saving us in terms of just being able to continue some of the things that we have done, which are really amazing as human beings. And part of the reason we've been able to do those is because our climate has been in a position where things have been relatively stable, and we haven't had to contend with some of the regular changes in terms of our seasons or natural disasters or temperatures. But we're exiting out of that situation now, because not because the planet is changing that way by itself, but because of human factors that have led to that. And some of those human factors relate to carbon emissions, but some of them relate to some pretty disastrous behavior in terms of just respecting our natural world and respecting each other. So I would say that in terms of why climate change should be important, if we don't take into account, if we don't resolve climate change, and it is possible to resolve it, I think everybody in this call will agree with that. If we don't resolve some of the issues associated with climate change, we're not just going to see biodiversity loss, which is what was explained by the previous speaker, but we're going to see human loss, we're going to see human conflict, we're going to see, we're already seeing additional diseases and health problems associated with this. We're going to see just a catastrophic change in how we're able to live, and that would include a massive financial impact as well.
Brilliantly put. Thank you, Emma. That's excellent. So, Randeep, I'm going to come to you next, if I may, because I want to sort of hoover up the main points, set the foundations of all of this first. So COP21 in Paris 5-6 years ago, was it that long ago, set this target of keeping global temperature increases, below 1.5 degrees if possible, if not then 2 degrees. Would you mind explaining, please, for everybody, just to get the information out there, why did they do that? What's relevant about those numbers?
So many different groups, including the IPCC, have modeled in exactly how much carbon we're putting into the atmosphere today and what that means in terms of temperature rises and then the consequences of that, whether it be for crops, whether it be for sea levels, heat waves, droughts, water shortages, pollution in the air, the quality of our oceans. And it comes back to say the level that we are putting emitting greenhouse gases, that is unsustainable. And unless we slow that process down now, and we really do mean now, we are going to cross a threshold of no return where there is no going back. And what the Paris Climate Framework put into place was that we want to keep the temperature rise below 2 degrees, and ideally at maximum 1.5 degrees at pre-industrialized levels. And that will mean that the huge losses that we have, as Amarachi has touched on, biodiversity, the livability of the planet, and economic losses down to an absolute minimum. And in order to do that, we all, and this is the most important thing, we all need to work towards net zero carbon emissions by the year 2050. And so far, everything that we've seen shows that we are not quite getting there yet, not by any stretch of the imagination.
Thank you. Very, very clearly put. Yes, we're a long way off, and we're already, Vicki, maybe you'll correct me on this, or someone correct me on this, but estimates seem to vary 1.1, 1.2 degrees already. So we haven't got much wriggle room, hence the short timescales that we're talking about. So Ben, could I come on to you then to just explain? So we get periodic reports come out from the IPCC, the Intergovernmental Panel on Climate Change. Their information, if you like, pulls together lots of other stuff. And what we've seen this time round is a ramping up of what they're talking about. Ben, could you talk us through that, please?
Yeah, absolutely. I mean, just to your earlier question, Julia, the reality is that the global surface temperature, according to the recent assessment report 6 by the IPCC, is now 1.09 degrees centigrade higher in the last decade than it was between 1850 and 1900. And in fact, we've already seen increases over land of 1.59 degrees centigrade and the ocean of 0.88 degrees centigrade. So as we touched on, the Paris Agreement calls for well below 2 degrees. We've already hit over 1.5 degrees over land already. But the assessment report 6 itself was really an effort to summarize the physical science basis of climate change. And it pulled together more than 14,000 peer-reviewed studies. And there's a couple of, there's a number of findings that the report came out with. And foremost amongst them is that the authors concluded that it's unequivocal that humans have warmed the planet and that it's causing widespread and rapid changes to the Earth's oceans, ice and land surfaces. We're also seeing evidence of observed changes in extremes, such as heat waves, precipitation, droughts, tropical cyclones, and these are likely to continue to increase as the climate continues to warm. I mean, somewhat disconcertingly for me was actually some of the language that was used in the document, which is a established and quite conservative piece of analysis. And I might just read a little bit of it, which notes that low likelihood outcomes, such as ice sheet collapse, abrupt ocean circulation changes, some compound extreme events, and warming substantially larger than the assessed very likely range of future warming cannot be ruled out and are part of risk assessment. So from the IPCC, that's quite robust language. I would draw one positive though from the report, and it really does show that the scientific modeling is increasingly confident that net zero outcomes do work for stabilizing or even reducing surface temperatures. So the extent of future warming is now really predicated on how much we can bend the emissions curves. And what we need to aim for as a society and as a global economy is what the assessment report terms shared socioeconomic pathways that are low impact in terms of climate change. So things like SSP 1.9, and this will hold warming to approximately 1.5 degrees centigrade above that 1850 to 1900 benchmark. So, the future really is in our hands in terms of how much warming we're willing to put future generations through.
So we can do it. There is a strong message of hope here, but if we don't get motoring, that's the wrong analogy, isn't it? But moving very, very fast towards it, we're in real trouble, and that's what the scenarios are telling us. And I think, yeah, thank you. That's brilliant, Ben. Vicki, possibly even bigger than the icon. I'm getting terrible feedback here. So possibly bigger than the IPCC report. We've got the IEA report that was making headlines, and I know you've got a couple of slides to talk this through. So if you would like to just tell Sally when to click through the slides. I really want people to understand the facts here, and actually adding slightly to Ben's previous comment, to my understanding from reading Carbon Wars and stuff in the past, I think probably what happened is that the IPCC this time were able to just say what they thought, rather than being so reined in by oil companies and so on. Let's hope that's true and carries on. But Vicki, can I ask you please to comment as you see fit, but go ahead and please explain your slides.
Sure, thanks, Julia. And just sort of following on from what Ben said, indeed, the science shows us we need to get to net zero emissions globally by 2050 in order to stand a chance of limiting global temperature rise to 1.5 degrees and avoiding the worst impacts. The trouble is, and when you look at these pathways, you can't backload that effort. We can't wait for the technologies to become available and then rapidly cut emissions after 2040, because greenhouse gas emissions hang around in the atmosphere for a long time. And we have a limited carbon budget, and if we use that up quickly in the next decade, then we've lost the opportunity to sort of limit the global temperature rise to 1.5 degrees. So a lot of the focus now in terms of when investors are talking to companies and in terms of COP26 is around the trajectory from now to 2030. So what's going to happen in the next decade? And what those pathways that Ben was just talking about show is that from here, roughly, we need to cut global emissions by 50% by 2030. What the International Energy Agency has done, so the International Energy Agency is a sort of the key international organization which is an expert on the global energy system. The majority of greenhouse gas emissions come from the energy system. We also have some resulting from agriculture and deforestation. But in terms of the energy system, what the IEA have done is said, okay, well, that's what the scientists said we need to do to limit to 1.5. Let's take that emissions trajectory, looking at the energy system in particular, and let's put that through our energy model. And let's see what that means in terms of what is the most cost-effective route to get from here to 2030 and then beyond that to 2050 in terms of the changes we'd need to make to our energy system. And they've set that out here. I appreciate the text is pretty small, so just to take a few highlights out, they say, well, that implies that we stop new exploration and production of oil, gas and coal pretty much immediately, that we stop selling new fossil fuel boilers in 2025. By 2030, 60% of all new car sales should be electric. 2035, all electricity in developed markets should be carbon free. And by 2040, we close all the world's coal-fired power stations. So this is not the IEA saying what should or could be done. It's saying, oh, this is just, if you set that emissions limit, this in the energy sector, this is the most cost-effective way of achieving that. And that really shows you why this is so important to investors, because this is a vast economic transformation, pretty much across all sectors of the economy. And then it's going to need an enormous shift of finance and a reallocation of capital to go from our current primarily fossil fuel-based economy to a sort of carbon-free economy, and to even get close to hitting some of these milestones that the IEA has set out. We can close that slide now, thanks.
Did you want to talk through, I think there were 3 slides. Are you carrying on, Vicki, or did you want to come back?
I can carry on. I was going to talk about COP26.
Actually, that's yes, that's actually. Why don't you lead off then, Vicki? What we're expecting from COP26. So that is the next bit, and I will bring everybody in on this, because there will be views in common. So maybe don't, let's just try and make this a conversation that goes through on this. But COP26 is massively important. The stuff with the IEA that Vicki's just talked about is international. That's the whole world. The implications of this are immense. So Vicki, please kick off with what we're expecting from COP26, please.
Sure. So COP26 is particularly important. So because these COP meetings happen every year, this is the meeting of the parties to the UN Framework Convention on Climate Change, happen every year. Why is this one important? It's because it's the first review meeting after the Paris deal. The Paris deal was the one that set out that temperature limit that people were just talking about. At that meeting, countries agreed to come back every 5 years and review something called NDCs. So if you watch the media on COP26, you hear a lot about NDCs. NDCs are nationally determined contributions. That's basically every country coming forward and saying, well, okay, we need to cut emissions. Here's our contribution. Here's what we're going to offer. And of course, there's a huge free rider problem here. But the global emissions are what matter. But everyone's put forward their NDCs. The plan is after 5 years, you come back and you say, well, what's the science said? How have emissions gone? Are those NDCs or national plans still good enough? Of course, that was meant to happen last year, this time last year, got delayed due to COVID, so it's happening very shortly next month in Glasgow. What you can see here, and this is from the latest UN report, which is reviewing all of the latest NDCs that have been put forward, is that we have a huge emissions gap. So we just heard about those pathways and that trajectory and the 50% cut by 2030. The red bar here, and there's some variations in how you measure it, is what countries have put forward so far. There is a huge gap. So, roughly, if countries carry out all their plans, we're looking at flat emissions over the next decade, more or less. We need a 50% cut. So part of the purpose of the Glasgow meeting is to try to squeeze shut that gap. The trouble is that we already know what a lot of the key players are doing. We've already had a lot of these plans revised and resubmitted ahead of the COP meeting. That's how it works. They're submitted in advance. So we've had the UK, 68% by 2030. We've had the EU, we've had the US, which is back in the fold. Still waiting for a few key ones, but we know that that gap is still going to be there. It'll be squeezed, but it is not going to be closed just from the commitments that governments make. What that means is that other actions are, sorry?
I was going to say sobering stuff. Anyway, carry on. Finish the sentence.
It is very sobering stuff. When you look at that chart and having worked on this for 20 odd years, you do hang your head. But what that means, the fact that you don't have all the targets lined up, means that what's also important is the actual actions, the implementation steps that countries are taking. And this is also important. It's not just about setting a bunch of numbers. So on the next slide here, Boris Johnson just recently summarised these at his speech to the UN a week or two back. And in typical style, crunched it down to some sound bites, but actually some quite useful sound bites: coal, cars, cash, and trees. So this is what you need to be looking out for when seeing how that COP meeting is going. So coal, I mentioned coal phase out earlier, phase out the use of coal-fired power. Cars, looking at only allowing zero-emission vehicles to be on sale across the world. Of course, the UK taking a lead on that, banning sales of internal combustion engines coming up. Cash is super important. This is very politically important. Some years ago, I think it was 2009, developed countries said, yeah, we're going to transfer 100 billion a year in climate finance from developed to developing countries. We know we've benefited from the use of fossil fuels. We've grown our economies on the back of it. You haven't had the chance. So let's make the difference up. Let's transfer this public finance across to help you deal with climate change. Hasn't happened yet. Countries like India are hyper-focused on this. Developed countries have to deliver on this, or they'll see us as breaching our agreement. And trees, back to that point on biodiversity, making that connection between deforestation, biodiversity, and climate change. And what you'll see here is there might be some commitments across all countries, but what you're likely to see more is individual countries coming up with new pledges. Most recently, for example, China pledging to end the finance of overseas coal-fired power. So that's the kind of thing that we'll hopefully see some progress on. And the private sector will be there in force, including investors, to sort of show, well, governments, you need to step up, because we, the private sector, we're ready to step up. We're ready to make net zero commitments. So trying to sort of put as much pressure on as possible.
Thank you, Vicki. That gives a wonderful summary. And what I think might be best is, I'll go through everybody for this question too, and ask for everyone's views on it, and just pick out those bits that you think are super important, or that's something that someone hasn't already gone into in some detail. And if one or two of you might pick up things like, well, let's start with one of the questions that's come in about the importance of short-term targets to focus people's minds. Amarachi, can I start with you, please?
I think actually that this is a fantastic question. And the reason why is because we're already dealing with some of the aspects of, some of the really bad aspects of climate change right now. So to give an example, so many of us actually either live or work in London, and air pollution in London is so terrible that between 3,600 and 4,100 people die per year with, of lung-related diseases associated with air pollution. We need short-term targets just to deal with things like that. We've got conflict in our country because over 3,000 people per year die from badly insulated homes, and people are blocking our roads. We kind of need targets specifically for that. And I know this is not a COP26 thing, but every country has these issues, because ultimately climate change is a threat multiplier. It makes all the bad issues that you're already dealing with 10 times worse. So what I would love to see is an impetus from the countries involved to actually set some really decent targets to deal with some of the really horrendous aspects that we're already seeing as a result of that climate warming, and also as a result of just human factors where we've polluted our planet, so that we can make life better for people.
I think that illustrates beautifully the interconnectedness of all of these issues, and the issues we've got with people wanting us to fit things in little boxes, and they just don't. This is all deeply interconnected with previous issues we've been talking about today. Randeep, can I please come on to you now to make some comments around this area?
Thank you, Julia and Amarachi. Let me just build on this. Like, this summit is important. Whether it's going to be a watershed summit, we're probably not going to find out until after the fact. But we do have 197 countries and territories signed up. And, go back to the 1980s when we had the nuclear arms race. It took conferences like this, Reykjavik, Geneva, and the mnemonic then was mutually assured destruction. And it's not too dissimilar today. All countries need to play their part in order to do it. And this is why short-term targets are important. Paris was a watershed moment, but it put in place a 2050 target. No politician today is going to be here in 2050 and have to live up to that. That's why putting in short-term targets from 2028 to 2035 into practice today, so sitting politicians can be judged on exactly what it is that they have to deliver, and they have to start putting in place policy and investment in order for us all to see that we're striving towards that today. Now, what will make COP a success? The short-term targets is definitely a key pledge that we're likely to see. The EU, the UK, the US have begun to pledge. Only the UK at the moment has enshrined it into domestic law. No other country has done that yet. So that will be important, and getting emerging markets on board above that will also be important. We also then need to tackle 1/3 of emissions, which are deemed hard to abate, i.e. unlikely to be electrified. Think the manufacture of steel, cement, aviation. We need a proper global policy to tackle those emissions, and we need it now. It seems as if green hydrogen is going to be that settled idea. But if that is the case, let's see the financing and the policy to move us there. And the third part of it, and this really would make COP26 to be a watershed moment, and that is proper carbon pricing. Let's have a carbon market in practice. Let's actually put a price on companies and countries that pollute and say, this is the cost for you to pollute, and that will then incentivize them further to cut their emissions back. Now, California are talking about putting this in place. The EU and the UK have a carbon market, and they're looking to make that more practical. A province in China is also looking at it. But this needs to become more widely accepted policy. And if we can go to some measure on all three of those areas, COP26 in Glasgow will be a watershed moment.
Brilliant. Thank you very much. Yeah, really, really important stuff. Ben, before I come to you, can I ask one of you, and hopefully Ben to pick up on this as a comment. So Mark Crofts is asking in the questions, he's had a client mention about sunspots and flaring, and that this is all part of a solar orbit cycle. Could one of you, maybe Ben, start with put that to bed for me, please?
Yeah, I mean, I'd be happy to put it to bed and just to say that it's not true, right? The Intergovernmental Panel on Climate Change uses incredibly robust language about the confidence metrics they have about anthropogenic climate change being the source of climate change. And it is incredibly strong confidence, in fact, unequivocal, now that they deem anthropogenic factors to be the cause of global warming. So it is not something exogenous to the system. It's us that are doing it. I could go on, but I'll leave it there.
Yeah, no, thank you. That sorts that. So can we come on to your views on COP26, please? Yeah,
perhaps two hopes for COP26. I don't know how hopeful they are, but they're two hopes. One is that the most significant piece of climate news that we've seen, I think, in the last 3-4 years was the announcement last year by President Xi that he was formally acknowledging a net zero carbon target by 2060. That was the single largest event that could potentially shift where we head in terms of the climate dynamics. My hope is that China come to the table and announce a peaking in emissions before 2030, which is their previously stated target, and a net zero target before 2060. So now aiming for 2050. I don't know how hopeful it is, but that's my first hope. The second hope is more related to what we in the financial system can do. And if you recall, the Paris Agreement actually calls for finance flows consistent with pathways towards climate resilient development. And something that we at Sarasin have been very focused on is how can we try and catalyze financial flows from a policy perspective. So along with some of the peers and colleagues that join us on this call today, we put a investor position paper to Alok Sharma earlier this month in which we called for net zero accounting. And what we're really trying to do here is create a policy framework that ensures net zero accounting for all firms to follow. And we really believe that this could catalyze a drive to shift capital away from emissions intense activities towards clean climate solutions. I suspect that ask may be too late for this conference of parties, but we definitely think that catalyzing financial flows to make them more aligned with the Paris Agreement from an accounting perspective is incredibly critical.
That sounds like a great idea to me. The more we can make it feel like business as usual, the more we can hush, if you like, the people that seem to still think this is wacky, that we come across all the time, that are just deeply, deeply depressing. Can I come on to you with a question to start with then, Vicki? So I've had a question through then from Richard Essex, who is really into these things, okay? So Richard's an IFA, and he's asking if there's been evaluation of the pledges that have been made around the NDCs. I mean, are they just flimsy headlines and promises, or has, what's happened around the NDC side of things?
Yeah, so there is a report that the UN put out, and that's where that chart was taken from, which is analysing the NDCs. There are some countries which are out of line with their respective NDCs. I think the UK, to give it some credit, has taken the lead here because we do have an independent climate change committee. That independent committee puts out progress reports, and it says exactly whether or how the UK is meeting or not meeting its targets, and in what areas it's leading and what areas it's lagging. It would be great to see that model in other countries because, yes, other governments are not necessarily held to account in the same way. And we need to see more, as I said, in the way of implementation. It's no good to say you've got a strong target, you need to make some commitments. So I absolutely agree with Ben about China. We want to see some more ambitious targets from China. What we also want, as I said, they've just made a commitment on financing overseas coal. We want to see some stronger language about financing domestic coal and domestic coal-fired construction. That is an absolutely critical point. So yes, there is some analysis from independent sources such as Climate Action Tracker. There's some from the UN report I mentioned on sort of NDC implementation, but what we could do with a lot more pressure. And I think that's one thing actually investors could do more of is to put the pressure on governments, not just to set the targets, but to put the policies in place to implement them.
Would anybody else like to come in on that one? So Randeep, Ben, or no? Okay, so this then, so we're mainly talking to financial advisors today, financial service intermediaries, wealth managers, and people who aren't generally running the money. And I would like to I'd like to try and bring it into the questions. Well, how do they frame this with their clients and with the people they're talking to? And actually, Sue's just put a note in front of me, which plays completely into what I was just about to say, which is around signposting for carbon pricing for beginners. Jill's asking a question. So how do we get this so that IFAs can explain this to people? So do any of you know anything around carbon pricing that we can pop in the chat for those intermediaries who want to upskill on carbon pricing? Because we all talk about it as being important. Where do you go for information on that? Do any of you have thoughts? Ben, you look like you might be heading to your mouse.
Yeah, good guess, Julia. Or I mean, I think one useful resource that we increasingly look at is some of the economic literature that exists around carbon pricing that will be needed to induce the transition and really catalyze the transition. So there's a group of central banks called Network for Greening the Financial System. And recently they put out a range of scenarios, and some of those scenarios incorporate carbon pricing scenarios that will be either needed as an explicit carbon price or some form of shadow carbon pricing to induce the transition, especially for those hard to abate sectors that Randeep noted. So Network for Greening the Financial System is a useful resource. One caveat, though, is that we have to be very careful about thinking about applying carbon prices homogeneously to sectors. So the ability of some sectors to integrate carbon prices is different, and the pass-through will be different on different firms. So all carbon is not created equal in terms of the impact it has on individual firms and individual industries.
Indeed, and then there's the likes of methane, etc., that are largely ignored and overlooked. So we're talking carbon equivalents, which is a conversation that I don't feel has really hit the mainstream very much just yet. Can I ask Amarachi, would you like to come in on this at all?
I think what you just said about carbon equivalence is a fantastic point. We've got, I see on a regular basis, some very creative accounting when it comes to carbon reporting from companies, where they will report carbon or carbon based on scope 1 and 2 and then say that they're carbon neutral, when really you need to take into account scope 3 as well. They will say that they are low carbon because they've counted their CO2, but that industry is also producing other gases that if you were to do a CO2 equivalency account, that industry would be significantly, it would be a significant contributor. And there are some industries that we're seeing that are not getting more efficient in this space because they're able to do that kind of creative accounting where they're not being held accountable by others in terms of saying, actually, I can see that your carbon figures don't make sense. I can see that your carbon intensity is going up every single year, when if you were being efficient, it would be going down. And actually, can you do something about it? And the truth is that I don't think that this is made easy for anybody in the space. Part of the problem with looking at all of this, and part of the reason why we haven't made so much progress, is because there are so many different terms and there are so many different ways of cooking the books that people are able to greenwash their way to making themselves look much better than they actually are. And this isn't just, is not just exclusive to companies, it's also governments as well. And this is where even our own government has actually come under fire for some of their actions, because they're not counting all of the carbon emissions in what they're doing, which doesn't really help. I think like what would help would be to have just some common metrics across the board in terms of how to actually look at this, so that it would make life easier for people like me, make life easier for IFAs in terms of actually having a look at whether a company is doing well under this or not. And right now, we don't have that.
I completely agree. Can I come on to Vicki first and then Randeep afterwards? Really briefly.
Realising we've only got about a minute. If I was a financial advisor, I wouldn't start with the IPCC reports. They're great. They're not very readable. You can try the summary for policymakers, but I would start something with the International Energy Agency report that I mentioned. It's a big report, but there's an amazing executive summary. I'd really look at that. Committee on Climate Change for the UK is great. On the science, I'd actually start with something like NASA or even the BBC is great. It's really good resources. And then as a financial advisor, I guess the question is, how do you judge what investment managers are doing about it? I think you can look at whether your investment manager has got a net zero commitment as part of, for example, the Net Zero Asset Managers Initiative. And you can also look at what engagement investors are doing. I know they're going to come on to this in the next session, but that would be one thing I would be asking to look at is, well, to what extent are you putting pressure on companies to take action on climate change, and how can you evidence the impact you're having?
Thank you. Just to say, I will let this session run over by probably 2 minutes, just because we started a couple of minutes late. So I will stick to time generally, but also it just makes sense for us to finish this round off, given when we started. Randeep, can I come on to you, please?
Thank you, Julia. And let me begin by answering your first question in terms of how important this is for IFAs. There isn't a single thing that we do today that is not going to be impacted by net zero. This is not just the utility sector. This is not just the auto manufacturing sector. How we live, how we eat, how we travel, how we work, how we consume, every single thing is going to be touched. There won't be a single sector that isn't affected by this. Every investment you make now, just to give one example, the circular economy, conceptual in sense, 25% of emissions could be reduced if we simply reduce, recycle exactly the materials that we have in practice today. And then the Essential report will show you 3.5 trillion extra can be generated for the economy just by doing that, by individuals saving more money, saving the planet. So there's many things we can do. And in terms of, we've talked about greenwashing for some time now, and it's getting more and more prevalent now. People like to attach hot areas to what they do, regardless of whether they do it or not. The EU have regulation, it's called SFDR Article 9. Article 9 funds have to have dual objectives, and they have to show every single year exactly what impact they're having on the environment. If a product doesn't have that and it claims to be environmental or climate, it's most likely not. We run a climate solutions fund. We provide a climate measurement report for the fund and detail every single holding in terms of how much carbon they save. Again, there are ways to look at products to ensure that A, they're doing good, and B, the manager is doing exactly what they claim to be doing.
Brilliant, thank you. Can I just ask if there's any important points anyone would like to bring out that we think is missing before we go on to the client or to the poll for people who are here? And I'd like you to stay on, if you would, to see what people answer in the poll, and we'll have a quick run around that. Is there anything important? Just wave at me. No, okay, it's looking good. Sorry, Amma, were you?
I just wanted to really stress that this isn't hopeless. I think that's like, we talk a lot about the doom and gloom, but there is hope in this situation. Most of us wouldn't be doing this if we didn't believe that the situation could change. So, and for the IFAs on the call, you can be also part of that hope and make money at the same time. So that's something that I really want people to take away.
I think that's absolutely right. That's why we stick with it, right? Because we believe it can be done. Otherwise, we'd probably just go party and forget it. Could I please have the question up? So a climate change question for everybody who's here. I'll let you read it. But when starting a conversation with client trustees or other decision makers, which of the following statements might be a good way to introduce the relevance of climate change? Right, I think in the interest of time, we'll knock this one on the head now, if we may. So I think there's a majority of people saying this is moving fast. I think Randeep just fed us the answer to this one just before the question went live. But yes, it's growing, it's affecting all areas. You should be, consider it sooner rather than later. But I know people will have views, and there are some who are waiting for the perfect. But I think my advice on that was, don't let the perfect be the enemy of the good. We're all, as we keep saying, we're all on a journey, we're all trying to move forwards. And with that, I'll say a massive thank you for a really, really great session. Thank you so much, everybody.